Hope everybody's having a great day wherever you are and you're enjoying the current state of the market, guys. Today we're going to be talking about Bitcoin. We're going to go over the news in regards to the ETF. What the heck is going on in regards to, this misinformation that has been driving basically the market up close to $30,000. We're going to be covering Zen because Zen did actually have a big massive pump so far, bringing you about 80%. We're going to talk about whether this is sustainable in both assets, Bitcoin and Zen, and we're going to talk about overall the Bitcoin dominance as it is starting to essentially go up, more likely looking for that 60 percentile region. But let's go ahead and discuss real quick what happened and the reasoning for this Bitcoin pump. So there was news that leaked out in regards to Cointelegraph saying that the iShare Bitcoin spot ETF was approved, but however this information was completely debunked as BlackRock did come out and saying that there was no application that was approved by the SEC and that they are still actually working towards getting that approved. Now, with that being said, is this a bull trap scenario, basically getting the traders on the long side of the market and then completely washing and liquidating a lot of these retail money that are basically trying to long this region? Now, with that being said, we did see some strategies meet some of our conditions in order to take a trade, so we're going to be covering that as well too. But first off, let's just go ahead and talk about whether or not this can be sustained. So far, the current price action that we saw based off of this news, drove us roughly, as you can see off of the bottoms of this, roughly around 12%, guys. So this is a very nice, big, massive move, especially knowing we've been consolidating and ranging for quite some time, at low levels with low volatility. Now, with that being said, we are currently trading above this particular mid region, coming back all the way since March, which is good. There did, something came out of this which is kind of particularly good, is that we're no longer trading below this mid structured region. Now, whether or not this actually can be sustained, in my honest opinion, I don't think so. But those are speaking from, not strategic conditions that are being met on the strategy. These are just my emotions in terms of, I think this is basically washing some of these traders and getting them liquidated and getting them on the wrong side of the market overall. But however, me here at Crypto Bros, we don't trade our emotions. We trade based off of our strategies and the conditions that are basically being met. So with that being said, we can see that on 5-day strategy 18, so far this has been actually playing to the upside. Now, some of the conditions that have to be met in order for you to take the strategy were met on August of 2023. So with that being said, what you need to see is you want to see BBWP get to very low levels of 16 percentile or below, and you want to see the stochastic essentially cross below the 54%, and that gives you basically an entry condition for this. Now, I'm going to present you the data set so you can actually see what the statistics are for these iterations in this data set. So we can see the upside targets is about 58% with a downside of 32%. We've already seen this play out to the upside. The average move that you should be seeing more likely in this is about 10%. We've already broken above that 10 percentile, bringing in about, again, about 14% from where the conditions were met. Yeah, roughly about 14 to 15%. So you've already seen the minimum average. 58% would basically put you roughly about $41,700, which is confluencing with this particular resistance area, coming back all the way from the bull market, right? Bull market to bear market phase. So yes, can this rally up to 58%? I don't think so, because this is more likely driven by news, and there is no fundamental buying aspect of buyers wanting to basically push prices up. I still do feel that this is going to more likely be a halting grind up, slowly, trying to break some key resistance area. But I'm more likely saying that we can come back down, to the regions of 27,000 to 26,000 before more likely retesting to the upside from here. Again, that's particularly what I'm seeing in terms of Bitcoin. We also did see the conditions being met for the strategy 21, which I'll bring up here for you, not this one. And the conditions for this one was actually met roughly on October of the 14th. So on this particular data set, I'll show you here, guys. Bring this up. Strategy 21, we can see that the upside targets is about 4.66%, which has already been met in terms of that. The downside targets were about 7.17%. I did post this on x.com, guys, so if you're not following me on there, you're kind of missing out on a lot of these, again, conditions that are being met on some of these strategies that I've created. So with that being said, 7% would have put you just roughly below $25,000, which is a key area of that, bottom range of this whole structure that was created back in March of this year. So again, we saw this play to the upside. We broke in the 4% average for this particular strategy. So this would have been a very nice trade based off of when the conditions were actually met. So let's go ahead and talk about real quick about Bitcoin dominance. Again, Bitcoin dominance really gaining strength against a lot of these altcoins, moving above, the 52 percentile, breaking away from the highs of June there of roughly around 52 percentile as well too. We're currently seeing some resistance off of this, because if you look at the higher time frames, guys, we can see that there is a confluence of resistance. We'll put it back on the weekly so you guys can see a lot better. So you can see there is a confluence of resistance, coming back all the way from 2019 of March. But I do feel that, going forward, a lot of these altcoins do not have strength, as they're more likely driven by retail investors. Usually, there's two scenarios that, that could drive the altcoin market up. One is, retail funneling into some of these altcoins, which can start basically an altcoin run. Or you basically have a big run up in Bitcoin, and then you start to see some of those gains trickle down to altcoins. Now, I don't think neither of those happening anytime soon, due to the fact that, again, retail are seeing high debt levels, maxed out credit cards and things like that. So I don't think retail are going to be forming any time into some of these altcoins. But again, by Bitcoin gaining a lot of strength against a lot of these altcoins, I do see that there is a clear shot going to 58 to 60 percentile from here on out. So that's basically what's happening in terms of the Bitcoin dominance side. If we take a look at Zen real quick on the 12 hourly, we are starting to see a nice pump in regards to Zen. Again, being completely hit hard constantly with these lower lows and lower highs. So far, not too shabby, guys. We've seen roughly around 84% to the upsides from the actual lows. So that's a very close to 100% based off of you bought off of the market. Now, a lot of these mentors who have been holding on, more likely a selling opportunity for them here. With that being said, we are trading above the 55-day moving average, which is a very key critical area that we need to stay above, because we can see here historically, based off of the 55-day moving average, it's played a key resistance in terms of bringing Zen a lot lower every time that that target has been actually met. Now, where do I see the mid-region resistance come in? Well, it's going to be around the 697 area to 704 area, which is a lot of confluence again of resistance in this area, as you can see, guys, and also confluence of resistance back in from the previous lows of that big swing up in March that we had, which is coming back all the way in March of 2023. So there is a bit of a confluence of resistance. However, I would not make anything of this as long as we try to close a couple candles above the 55-day moving average. I think we can turn this in a nice uptrend on the lower time frames, putting on the 2 hourly or 4 hourly higher highs and higher lows. However, that's yet to be determined whether that's the case or not. Usually, looking at all of these indicators, you're currently maxed out, coming all the way to, you just had a big shot up on the stochastic to the 66 percentile, which is good. You're getting in that bullish control zone for the oscillator there, which is, you know, can still build up. We still have momentum. Again, a lot of more way to actually move up. I would like to us for, you know, to move up a lot, you know, slower, build a little bit of a plateau, a bit of a structure, so we can, you know, continue on and upwards from here. But again, you can see on the daily, guys, that 55-day moving average is coming around the 5208 area. However, again, the main target I'm looking at is the 700 price point. So also, guys, with this particular strategy on the 12-hourly, again, if we do start to see a closure below this yellow line with low volatility, which I don't think we will see anytime soon, because we are currently from, you know, the expansion to contraction phase, we've already seen BBW max out at 98%. For more likely, we are going to start to see more sideways movement before the actual next move or leg down or up from here. Again, I'll leave you off with this, guys. I hope you enjoyed this video. If you did, give it a thumbs up. Until next time, bros, as always, stay profitable.